Today we focus on East Africa's technology and investment landscape. Safaricom shares have surged over 25% in recent months, attracting significant investor interest and reshaping market dynamics. What's behind this rise? Safaricom's strategic shift towards becoming Africa's leading technology company, particularly through its impactful expansion into Ethiopia, is key. We'll explore how this move has boosted investor confidence and elevated the company's status. From trends affecting major businesses to practical financial strategies, Mint is here to empower you. Stay with us. My name is Lydia Nyawira. Also, today on Mint, the rising cost of fuel continues to be a pain for consumers. Milk your profits, uncovering the hidden wealth of a well-managed dairy farm. Ink to income. Isaac Yenya turns passion into profit. This week, we are cutting through the noise to provide you with insights that matter to your finances. Have you noticed the surge in Safaricom's share price? It has been on an impressive upward trend, largely due to their bold expansion into Ethiopia, which solidifies their position as a leading technology company in Africa. We will break down what this means for investors and the broader market.
Welcome to Money Moves, your go-to for understanding what's moving the economy. Today, we're putting one of Kenya's biggest players under the microscope, Safaricom. If you're an investor or even just curious about the economy, you've likely seen Safaricom stock making headlines this year. So what's been happening? Let's break it down. Looking at the year so far, it's been a dynamic ride for Safaricom on the NSE. After some fluctuations, we've seen a noticeable upward trend. In fact, year to date, the Safaricom stock has shown a 54.36% increase, with a more recent monthly rise of 10.63% and a weekly jump of 3.31%. That's a significant bounce. So, what's behind this bullish momentum? Several key factors have been fueling investor confidence. Safaricom's recently concluded 5-year strategy has been a success, leading to strong financial results. The company has seen impressive customer growth across all segments, with improvements in key performance indicators. Investors are clearly reacting positively to this solid operational delivery. The approval and detailed presentation of Safaricom's new 5-year strategy has also provided clarity and confidence. The company aims to become Africa's leading purpose-led technology company, focusing on more solutions-driven growth. This long-term vision has resonated with analysts and investors alike. A generally improving macroeconomic environment in both Kenya and Ethiopia has also played a role. We've seen inflation ease in Ethiopia and a period of stability in the Kenyan shilling, which is particularly attractive to foreign investors. Investors have shown a strong belief in Safaricom's management team to execute on their strategies and deliver on guided targets. The resilience of the Kenyan business, particularly in M-Pesa, connectivity, and fixed services, has also been highlighted. Even when the share price was lower, many analysts consistently viewed Safaricom's stock as undervalued, suggesting a significant upside potential. And let's not forget about dividends. Safaricom has continued to reward its shareholders. For the year ending March 31, 2025, the company announced a total dividend of 1 shilling 20 cents per share, comprising an interim dividend of 55 cents and a final dividend of 65 cents. This consistent dividend payout remains an attractive feature for many investors, especially in an environment where alternative investment yields like bonds and T-bills might be lower. The answer also lies largely in the promising developments from Safaricom's Ethiopian venture, which is quickly becoming a significant driver of growth. Just recently, Safaricom Ethiopia announced a major milestone: 10 million active customers on its network over the last 90 days. This isn't just a number. It signifies a rapid growing, loyal customer base, as customers active for 90 days are considered long-term users, not just temporary ones. To put this in perspective, it took Safaricom 8 years to reach 10 million customers in Kenya. Ethiopia has achieved this much faster, showcasing a remarkable adoption rate for the service. Initially, Safaricom Ethiopia thrived on providing excellent mobile data, thanks to the new state-of-the-art 4G infrastructure. However, as the customer base grows, so does the potential for more profitable on-net usage. That's when Safaricom customers call and text each other within the same network. This reduces costs for Safaricom, as they don't have to pay mobile termination rates to other providers like Ethiotel. Another exciting factor is a strong appetite for data in Ethiopia. Of the 10 million customers, 7.1 million are active mobile data users, with average consumption rising to 6.5 GB per month, a 53% increase from last year. This is significantly higher than Kenya's average of about 4 GB per customer. So, what's the outlook? Analysts are generally optimistic. Safaricom is forecast to grow earnings and revenue significantly in the coming years. While past performance is not indicative of future results, the current trajectory and strategic initiatives suggest continued focus on growth and shareholder value. The stock did experience a correction phase at some point, which analysts often view as a healthy part of market dynamics and a potential opportunity for strategic investment. Safaricom remains a dominant force in the Kenyan market and is making significant strides in its regional expansion. Its stock performance this year reflects a renewed investor confidence in its strategic direction and operational execution.
Today we are discussing a topic that has everyone talking: the recent increase in fuel prices, which has added an extra 9 shillings per litre. Why do fuel costs continue to rise? Why are we paying more than our neighbors in Uganda or South Africa? Most importantly, will it ever improve? I will explain the real reasons behind these numbers. Following the recent review by the Energy and Petroleum Regulatory Authority, the cost of fuel in Kenya is now an everyday conversation for most. Whether you're driving or taking a taxi, the struggle is shared. So, what's the reason for the higher fuel cost in Kenya? Yes, you guessed it right: taxes. VAT is the most well-known, but there are also at least 7 other taxes levied on fuel in Kenya. The result? 40% of what you pay for at the pump is just tax. Simply put, out of every 10 shillings you pay for a litre of fuel, 4 shillings goes to taxes. Let's compare that with a few other countries. In America, the highest fuel tax is 14%, while in South Africa, it's at 30%. How exactly did we get here? Buckle up and let's go for a ride. Kenya introduced VAT in 1990 at a rate of 17% to replace the 3% sales tax. Back then, Kenya was broke, and the IMF lent it money on condition, among them, higher taxes. What does this mean? You said VAT was introduced in 1990. It's a little confusing. The pain at the pump was then postponed twice. In 2018, the rains finally caught up with us, but a compromise saw VAT capped at 8%, not 16%. Enter the Finance Act 2023, and out goes the compromise. And since then, the taxes have kept the cost of fuel up. But that is not all that is keeping the prices of fuel up currently. 3 other things have happened in the last review. First, the government has denied consumers relief at the pump for the 2nd consecutive month after it opted not to tap the fuel subsidy to prevent prices from shooting up. The subsidy has at times prevented pump prices from rising by upwards of 9 shillings per litre of diesel, 7 shillings per litre of petrol, and 8 shillings per litre of kerosene. The landing cost of petrol in May was 76.83 shillings, while this rose to 81.88 shillings in June. For diesel, the landing cost in May was 75.43 shillings, while in June, the price was 80.22 shillings. For kerosene, the cost was 73.80 in May and 79.42 in June. The third factor is that the margins for oil marketing companies have also been increased in the latest review by EPRA. The margins on petrol have been increased to 17.39 shillings per litre from 15.24 shillings the previous month, while those for diesel have gone up to 17.32 shillings per litre from 15.16 shillings. For kerosene, the OMC margins have risen to 17.24 shillings per litre from 15.09 shillings in the June 15 to July 14 cycle. So here's the thing. High fuel costs drive costs of everyday commodities up, and this gets the voters hungry and angry. That's why governments are always trying to find ways to keep the fuel costs down. But when the coffers run low, the government fails to subsidize, as has happened in the last two cycles. So many interventions, many quick fixes, but what is never reviewed downwards is the tax. So as long as the taxes remain a huge component of the price markup, we will be here for a very, very long time. Now you know that there are at least 8 taxes levied on fuel in Kenya, and out of every 10 shillings you pay for a litre of fuel, 4 shillings go towards taxes. Let's take a short break. We'll be right back. Milk your profits, uncovering the hidden wealth of a well-managed dairy farm.
Earn it, spend it, save, invest. Moolah, kila siku waste moolah, make more bila stress.
Welcome back to Mint, where we explore the world of personal finance, making it simple and relatable for you. Whether you're looking to earn, spend, save or invest, we've got you covered.
Earn it, spend it, save, invest.
Dairy farming accounts for 14% of Kenya's GDP. In this segment, we will examine how a well-managed dairy farm in Kenya can achieve high profitability. For instance, a farm with 10 cows can generate monthly net profits ranging from 200,000 Kenya shillings to 250,000 Kenya shillings, amounting to an impressive 3 million Kenya shillings annually. To provide insight into achieving this success, we have a special guest, David Maina, Managing Director and Head of Business at Performita. He shares essential tips while running a lucrative dairy farm at Risa's farm. Take a look.
For somebody beginning, what is most important first is it is beginning with feed and not beginning with cows. If you're able to begin with fodder first, planting fodder, and I'm assuming that already the viability examination has been done and it's a go for that investment. Then they go to the structures, then they go to the equipment and the workers. Then cows come to a farm that is already set up. Most common cow that Kenyans have gone for is a Frisian. Because we are not able to do what we call a genetic audit, it's difficult to know whether it's Holstein Frisian or whether it is half Frisian and half something else. But let's say black and white cow is very common. You'll also find the red Frisian, you'll find Ayrshires, you'll find also Jerseys are also becoming very popular nowadays because there are people who are going for cows that give you less milk and higher butterfat. There are people who are going for smaller cows because they eat less and therefore they can be afforded. And then also the issue of structures. Bigger cows require higher investments in terms of sleeping comfort. When you go to a farm that has bigger cows, when they use mats, you can see that they're having wounds on the hocks, on the knees, and they have dirty legs or dirty udders because that cow is heavy and the pressure points are pressing too hard on the bedding. People go for what we call advanced pregnancy heifer. Now for Frisian, it will depend. If the farm has very good documentation, has a good reputation, and the mothers have a high production of milk, there are farms selling up to about 400,000 Kenya shillings per heifer. Now, I would say the top range breeds, we are having about between 330,000 shillings to about 350,000. In most cases, those are cows that were imported as calves or they imported directly as pregnant heifers from Europe or from South Africa or from other dairy developed economies. However, if you buy from a farmer who has very good looking cows, but they have no documentation, so you cannot be able to confirm the parentage, you can't confirm the top production of the mother, then in most cases, you're going to buy that cow between 180,000 shillings up to around 250,000. So that we can call it a second tier costing. Small farmers will sell cows between each other. You can have heifers as low as 90,000 shillings to 120. And that is now the third tier level. Capital estimation, these are the major things. The structure. Yeah, if you're using wood, mixing with a bit of metal because of the feedlocks and the cubicles, but then maybe you're using wood for the pillars and for the roofing, the cost can really come down. But perhaps the lowest you can get to is about 40,000 shillings per cow space. But we have bands that have gone to up to about 200,000 per cow space. The other one is fodder and feeds. Growing of the fodder, or whether you're buying it, that's a major part of capital. Now we have the other softer cost, the workers, the equipment, a milk impala, like semi-automatic, mechanical, where people are just putting clusters into the teats, and then milking is happening and milk flows into the lines, goes to the tanks. That's an expensive equipment. Then the tanks, then you also have the power, the energy, which is not part of the structure. Maybe the generators, you have freezers, you have coolers, the pasteurizers and so on. That can also be very expensive. We have two types of record keeping. We have what we call production records and we have what we call financial records. For production record, what is important is a milking record. That is what they use to reconcile how much they were paid and how much milk they produced. Then you have the health record. Everybody who treats cows has to indicate which diseases, which cow, what antibiotics I gave or what medicines I gave, and whether the cow is healed or the cow has not survived. Then you have the breeding record. When I mentioned to you about the price of a heifer, farms that are able to record the parentage of a cow, who was a mother, who was a father, when was she born, how long was she growing up to first insemination, up to first calving. That kind of KPI are maintained in the breeding record. And then we have also what we call the calf weight register. After she is weighed at birth, then how is she increasing? It is used to calculate the weight gain on a daily basis. Should we change the ration? Is the calf growing well? Is she sick? Because the weight gain can be able to be a good indicator of healthy growth. We have now the non-production record, which are more financial records. This is where now you register the costs and the revenues of the farm. So if an accountant came to your farm, they're able to check the expenses and the revenues, and I can be able to say what is the operating profit or margins for that farm. There are some cooperatives who are now processing. They have started processing their own milk. That also becomes a market for their own farmers. And they can be able to push that milk all the way to the market, and they're able to tell farmers, we can be able to get a good price because our yogurts are going, or whatever else they're making from that milk, or the mala, or fresh milk. Then you also have groceries, or milk bars, or milk ATMs. Those are people who are basically putting up on the street and selling milk directly. And then we have also seen farms who have, like this one now, who have their own processing. So they have the primary production section, but they also have the secondary production section, which is processing. So milk comes from this as a separate business unit and moves to the other business unit.
Earn it, spend it, save, invest.
On Coins to Capital, we explore the intersection of art and enterprise. Becoming a successful tattoo artist requires more than drawing skills. It involves years of hard work to build a strong portfolio. Isaac Yenya has done just that. His journey of navigating the tattoo industry and turning his artistic talent into a successful business is an inspiring example for anyone looking to monetize their creativity.
When Isaac Yenya was young, he struggled to understand how an image could be turned into a tattoo on a person's skin. It's that curiosity that led him to venture into tattooing, a subversive yet interesting art form that is socially seeing a growing acceptance. Now, 12 years into the game, Isaac is a tattoo artist and the owner of Ink Gang, a tattoo parlor in Buruburu, Nairobi, where his art literally leaves an indelible mark on his clients.
To be a tattoo artist, even if you're talented in drawing and other artistic skills, you need to look for an apprenticeship first. Without finding an apprenticeship, you can't learn because you need to learn from other tattoo artists. There's no actual particular school for tattooing.
Before Isaac could venture out on his own after his apprenticeship, he first had to find people who were willing to be practice canvases for his work. But finding those volunteers was hard, and clients even harder to come by.
It took me like 6 months. Most of the people were denying me the ability to just learn. And being an apprenticeship, you need to like open the shop, clean for the tattooer, basically running the whole shop, yani. while learning at the same time. Depends on how skilled you are in drawing, but can take 2 to 3 years. I had to do a lot of free tats at first. Actually, I had to work on myself first. I had to tattoo myself first because I didn't want to tattoo someone else, then do a mistake or have bad outlines on their tattoo or anything. Every tattoo guy or girl has their own clientele. And to build a clientele, you need years of experience. It took a while. It took like 2-3 years before I started getting my own clients.
At this point, Isaac had mastered the art of creating beautiful body art and started to gain a loyal clientele. The only thing left to do was set up his own tattoo shop.
While I was doing the apprenticeship in Kenya Cinema, I gathered some money for the 2 years I was there. It took me like, I guess, 150. Yani that's pretty basic. But for a good tattoo shop to run, basically it's like $500,000. Most of it went to the equipment because the equipment back then was really expensive. The machines took about 50,000, then depot for the shop. And I just started with like 2 seats, like 2 stools.
From the 150,000 Kenya shillings, Isaac bought
the power supply, the clip cord and the step switch, the machine, and a few needles.
As the business grew, Isaac bought more equipment to suit his clients' needs and ensure their safety. While tattoos are the ultimate blend of self-expression, creativity, and art, cost is a major factor to consider before taking a spot on the chair to get some new ink.
Every tattoo artist has their own price per se, depending on, I guess, how much experience they have, what they've been through in their career, location per se. But averagely, most tattoo artists, the starting rate starts from 2.5 onwards for a small tattoo, for a minimum piece. On a good day, you can do 2 pieces and get up to 70 Gs. So it's more of what size of piece, how detailed the piece is. Like the whole back, that can amount even to 100 Gs. It depends, from 40 to 100 Gs. Depends on how intricate or detailed it is and how many sessions you need to come through.
Like every other business, there are some good days and bad days, financially speaking. While the business is Isaac's bread and butter, he cautions anyone interested in becoming a tattoo artist to not do it for the money.
Me doing t-shirts, paintings, sometimes my tattoos, all that factors in me paying rent to this shop and every other thing. Don't do it for the money, I'd say. Though money you can't avoid, and it's a basic factor in every human being, but don't do it for the money. You'll give up really fast. I can't say it's been a good all through. There have been some hard times, the times I've questioned myself, but it's something I really wanted to do, so I decided to stick with it.
Isaac is a prime example of turning passion into a thriving money-making venture. This wraps up today's episode of Mint, Money Made Simple, your essential guide to personal finance designed to help you make your money work smarter for you. For more information, visit Mint at mula.co.ke or tv47.digital. Stay safe and keep minting. Until next week, I'm Lydia Nyawera.